Singapore's IPO market enters a new growth phase with SGX nearing 30 listings after 3 billion Singaporean dollar proceeds in the past year. To expound on this, we speak with Yu Kiang Chan of EY. Glad you could join us today, YK. So to start, what's making Singapore attractive for IPOs?
I would like to go back to the reason why companies are looking at IPO as an alternative for capital market activities. So typically, we look at IPO as a very attractive option for companies that's raising capital to fund their growth strategy. And an IPO very often is something that what we call the ABC or why companies should go for IPO. Firstly, give you access to the market, access to the capital to grow, and also access to talent. And accessing the market, to the point about accessing the market, a listed company probably would attract more attention, will probably get people to know the company better, and that's where the branding of the company comes in. This branding is not only just good for business, it's also good for attracting talent. And lastly, of course, an IPO, very often the shares itself is used often as a currency to attract talent and a currency to make acquisition using the shares of the company. So very often, when a company who has a very strong growth story, IPO option, and Singapore is attractive because of the branding of Singapore as a safe haven. There's a lot of trust in the Singapore brand, and that would attract investors from the region and hopefully globally. We're also attracting a lot of funds into Singapore as a place where investors, high net worth individuals, family offices put their funds, and that stability, that trust would always make Singapore an attractive destination for IPO, provided that the valuation and the liquidity of the market is doing well.
With that, would you say that Singapore is now strong or attractive enough to compete with larger IPO venues?
I think Singapore is one of the destinations that definitely would be attractive to the region. There are certain international markets that obviously are a lot deeper. If we look at the likes of the US exchanges or even the Hong Kong exchange as an alternative to the Chinese companies, and also the Tokyo exchange has been doing relatively well. But I think Singapore remains a destination that is probably something that regional companies should consider in tapping the capital markets.
But just for better understanding, YK, are issuers choosing Singapore for long-term investor depth or more of a short-term market stability? Which one is it?
I guess it's a bit of both. While Singapore, given its trust, as a safe haven, it definitely will attract companies to list here. At the same time, I think it's important to build on that trust. We often preach about the companies that come to list, wherever they list. It's very important to maintain the trust and confidence in the companies. And therefore, I think if you look at a lot of the reforms that has been happening in Singapore, it's not just about working on the demand side and working on the supply side. It's also working a lot about the investors' education, including education of companies of how they can value up. And one of the key things about valuing up is maintaining that trust. How do you celebrate wins and milestones? At the same time, how do you communicate bad news on a timely basis? All these are important to build trust in the companies, and that will be good for the companies in the short run, but also in the long run, you'll drive up the value of the company as confidence in the companies built up, as trust in the companies built up.
Now going to the specifics, YK, which specific sectors are likely to drive Singapore's upcoming IPO activity?
So Singapore had been very successful in attracting companies in the REIT space to list in Singapore. Obviously, we are looking at the early days where we're looking at commercial REITs, what we call shopping REITs, and recently, I think we are seeing more REITs in the data center space. But for Singapore to strive as an exchange, definitely we need to diversify, provide more diversity in the exchange. some of the sectors that would likely consider Singapore or should consider Singapore include the consumer product space, where there is growing and young population is in the region, industrial space, where we can leverage off the expansion of Chinese companies that are venturing out into the region. So these are the space whereby Singapore IPO activities are likely to strive. Obviously, we were also hoping for some companies in the tech space to consider Singapore, but I will see that Singapore do face quite a fair bit of challenges from the US market, particularly NASDAQ and NYSE in this space.
So what was it like, though? How did Singapore outperform other Southeast Asian markets in IPO proceeds?
So the Southeast Asian market, over the last 12 months or the last 4 quarters, we have seen Singapore number of IPO picking up. Definitely from a proceeds perspective, it has raised quite a fair bit of money through some mega IPO of the REITs and data centers. We do see that in terms of the number of IPOs, Malaysia is probably ranked in the top 10 world exchanges of the world consistently for the last few quarters. And in terms of proceeds, it definitely pale in comparison to Singapore market. And I think the strong Singapore dollar is also what is attracting regional companies to consider listing in Singapore. The stability of the currency, again, is back to Singapore as a trusted brand, as a trusted safe haven.
And did Singapore also benefit from regional companies avoiding more volatile listing markets?
I think for the region, we are seeing inquiries and definitely more companies are considering Singapore. There are a number of factors for region companies to consider. Very often, all these regulatory requirements in the home country, including license of their operations, are dependent on some of the key factors driving any listing decision. But I think in Singapore, I think that the reforms have made it possible for companies to list in Singapore without having to redesignate its listing structure, or what we call restructuring. One of the example is that there's no requirement in Singapore that the listing vehicle had to be a Singapore company, or you have to use a offshore Cayman BVI company. We have seen companies in Australia, in Israel, and even in Japan, listing the companies, a Japanese company, an Israel company, and an Australian company directly in Singapore. We have also seen Thai companies list in Singapore directly. So I think that the legal framework has been structured that way to permit companies in the region to list here. And the currency advantage, as well as the ability to attract international investors that are already here in Singapore, could be a significant plus factor for companies who are looking at listing destination.
Before we end today's discussion, YK, let's also touch on the things that we should prepare for. What risks could slow Singapore's IPO momentum in 2026?
There are global events happening that may dampen confidence in the market. Very often, IPO is about confidence of the market in the near-term prospect as well as the long-term prospect, right? So wherever we have conflicts such as the Middle East conflict or even the Russia-Ukraine conflict, when it does happen, it may create uncertainties. So uncertainties is typically a reason why companies may choose to revisit their fundraising plans or their capital plans, because it could have an impact of their business strategy. But many of these factors are not within the company's control. What I would say is that for Singapore IPO momentum to sustain is that companies that are thinking of listing in Singapore should be prepared for the IPO. Having a strong equity story, delivering value and promises would actually help a company to gather interest in the companies. So one of the things, or one of the risks that we are always very concerned with that could be within the control of the company is what we are worried is the optimism in the market may result in certain companies being overvalued. And if the share price do not perform post-IPO, that could have an impact on subsequent valuation and confidence in the market. But being well prepared for the IPO with a strong equity story, coupled with the right IR strategy to deliver the right message to investors, will build that confidence. And I think with that, we can mitigate a lot of risks that could slow down the IPO momentum in Singapore.
That has been very insightful. Thank you so much for sharing your thoughts, YK.
Yeah, thank you.
Once again, that was Yu Kyang Chen, ASEAN and Singapore IPO leader at EY. For more news, visit sbr.com.sg.